The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Very exciting session today. The Dow is only up 888 points. I mean, if I was talking to you about this, let's see, it's now 10:06. At 8:29, I could have been talking to you and say, the Dow's is kind of up, the future's up maybe 40 points, 36 points, the S&P's up about 7. Whoosh, it slides to the downside after the 7.7 CPI news. And then what happens is it screams. The next thing you know, it's up 100 points in the 1 minute chart. Unbelievable. So this is exciting for two reasons. One is it's the unexpected. You remember, I like to say it's not what the news is. It's the market reaction. To me, I don't care what the news is. I only care about I shouldn't say that. I do care about the news, but market-wise, I couldn't care in the least. I only want the response. And if you look at this response, look at this. The Dow spikes up, but what happens? All the technical indicators still remain in place because they are unobjective. And unobjectively, what we're looking at is there's a technique that I call the Chapman Wave Inside Track Repellent Zone. So we went right inside this little mini up channel, because it's time. You see green says you've broken out above it. That becomes the repellent zone becomes a propellant zone. And if it stays under the red or inside the red, it says, being repelled, it just can't break out. So we're watching this closely. Now, I know that a lot of people think that, the market, the amateurs come in for the first hour or so. I don't know. I've been working very hard at trying to develop a technique, a two-click technique. I've only that particular technique I've only implemented in a paper, in terms of paper trading. I should have ages ago said, hey, it works so well that those losses that you take in the interim period are just nothing compared to the gains that you make when you use the two-click method. It's a mental thing. I haven't quite got there yet. It's really, but I wanted to show you this. Let me go here to the E-mini because I think this is really important at this particular time. I'll go to the 10-minute E-mini chart, which I notate all the time, every single day. Even if I'm out and I come back, I go through it again and I notate. But the patterns that repeat over and over, you remember, I'm all about patterns. Chapman Wave, we're always looking for at least 4 higher peaks to go from a buy signal to a buy mode to a peak D. Not the point. The point is that within the context of patterns, I look at 3 major patterns. Straight up, straight down, cup formation, arch formation. You can have a mix of 1 and 2 and 1 and 3, but basically we're always looking at, in this case, it's red because it's called the dreaded H. If you go to one peak A or a B and then fail and take out the left side low, you can go a lot lower. If you hold it, you can go from an arch to an M, a lowercase h to a lowercase m. And the same thing on the right side. If you have a very strong rally, you pull back and then you go back to that high. How you take it out, how you stall there is important. So you got the 3 patterns, straight line, cup, and arch. Well, that's all that happens. But within that context, I have trend lines. I have 200-period exponential moving averages. I have 9 and 14-period. I have other techniques. And basically, it sounds like a lot, but you don't have to do anything. You just put them on your platform, and they're right there, and you use them when you need them. It's like as you go out the door, you got an umbrella. If it's raining, you use it. If you don't you don't use it. That's all, but it's there. And so what we're looking at here, the rectangle pattern, you remember the rule of thumb, it can go to the top, but if it breaks halfway into the low, it can take out the base. Look what happened here in the E-mini from 4 o'clock on the whatever day that was. That was on the 8th. Oh, that was at 340 yesterday. And then it went sideways, and then you broke down, you kept going down. Oh, I remember I was doing this last night while I was doing other things. So we get the inside track propellant zone, and it becomes a repellent zone. Then it creates another rectangle formation, and it holds in this rectangle between 37.75 and basically 37.52, just from yesterday's close all the way through to this morning. And instead of breaking to the upside, because this is the inverse of the narrow rectangle at the top, this is at the bottom, bam, you get this move to the downside to 37.51. Whoosh, you go in a straight. This is a 1 minute. Oh, sorry, this is the 10-minute bar. I should have shown you the 1 minute bar. It doesn't matter. It was a 1 minute bar, and then it stalls. And this has gone to peak A, the peak B, and there's a doji candle at leg C. What's the objective in the Chapman wave? To get you to at least a D. Look how many Ds we've got. A little D there at 11:10. That was early this morning. Oh, that was midnight. And then another peak A, B, C, D. It goes to an E before it pulls back, and then you get this huge spike to the upside. Well, that doesn't make any difference. Chapman wave notation just keeps going. It's the waveform that never sleeps. Boom! You get this move up, and you go to peak A, peak B, doji candle C. It's called a leg C until this 10-minute bar, which will finish up in a little while, is concluded. And then that becomes a peak C if there's no new high. A new high here in this bar just extends leg C. In the Chapman wave, there should be a D. But in a move like this, I'm saying to myself, wow, we're so extended just on a visual basis. Are we going to get another pop to the upside above the 39.19.50 high that was made 15 minutes ago? I don't know, but it should. The MACD is good, stochastic's good, on-balance volumes are fabulous at 96%, on-balance volumes a tad overbought, but still very good. So that's all you can do. So let's relate all of this stuff to what we're seeing here. So we made a peak D, we pull back. There is a chance. Now, we didn't go to a new high within 3 bars. It's 4 bars. Therefore, the Chapman wave instant restart doesn't count at all. It could be a down move with an up arrow if this continues to make higher highs. But look what's happened. We've gone right to the resistance level. We've broken out of that in the weekly chart, at least for now. But we've got to wait until Friday at 4 o'clock to call this. But this is just a single leg A up. But most importantly, look, the monthly chart finally has made a gray leg A above the 9-period moving average on a closing basis from last month. Beautiful big green candle. And this month, we're at this particular point, we're above that trend line. It's the same trend line that goes on in the weekly chart, obviously. So I'm watching all of this closely because under other circumstances, you would say, oh, come on. With all the news that's out there and the Fed raising rates, etc., how can we even be at a new recovery high at this particular point? Well, that's because there are so many other factors. Now, let me just do this. S&P cash right now trading in a very strong move to the upside. It just missed the 39.11.79 was the high on the 2nd of November. Today we made the cup formation, and I've been talking about this forever. How many times you make double tops within pennies of the previous high, and that's where you got to be careful. I'll go to XL, just about XL at the moment. I'll go to the XLE because we see double top. What's going to happen? Is that a top that says you go higher or not? I'll be back. Okay.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So in this particular case, when I talk about the two-click method, it wouldn't have worked today if I had, well, I suppose it would have worked if immediately as the CPI news came out, I just jumped on the bandwagon right there and said, I'm in. And then it would be a two-click day, and all I would be doing, I'd had one click, and sometimes you can go the entire, I don't want to take time now to do this, to show you the different charts, but so many times at 6 in the morning, even though the low might have been at 4 a.m. or 2 a.m., but at about 6 to 6:30, you're able to get a long position in the futures that can hold all the way through until 3:45 in the afternoon, 15 minutes or to the close of the day. It's either a short or a long. And it's been a long time that I've been kind of practicing this technique. I haven't actually put it into place yet for myself. I've done some variations of it, but it's really exciting because you basically, you put in your buy. If you get through the 8:30 news item in the morning, that's great. And then any 10 o'clock or 10:30 or maybe 10:30, the oil news on the reserves, crude oil, etc. But if you survive that and the market's strong, you can go all the way to the close. Or at that particular point, you've had your pop-up, and now it goes down for the rest of the day. And if it's successful, it means it's a very strong move in that direction, and that on those days that you're wrong, well, you make it up very quickly. So I wanted to show you something else here. So I want to finish that thought. The other thought is, if you look at this long-term chart that I show my subscribers every weekend when I do my market overview video, last week was about an hour-long video, going through all these different parameters, and I'd say there's a chance that this high that's made in the weekly chart of my 3 yields, that's the white is the TYX, 30-year T-bond, the 10-year is the T-note yield, TNX, the 5-year is the FVX. If that high becomes a high at a peak G, and I just checked it out because it turns out that in the weekly chart, let me show you this here, in the real thing, right here, TYX.X, there it is. You can see we've made a peak G/C on this move to the upside And we're going to see what happens. This is the pattern that I talk about, that H pattern. Remember, I showed you the red one a little while ago, where it comes down, bounces, fails at a peak A or a B, and then comes down sharply. Well, in this particular case, that's the low. There's the arch for the second. This is the first little H pattern right here. There's a much larger one, and this is the yields. This is the 30-year yield. So it goes to peak A right over here, and then it goes to B, and they could become a B minus, but there's the pattern. So here's this is the quandary I've had for some time. Is it the speed with which the economy slows down that really helps the Fed for their next move and what they can discuss, when the yields have accomplished all the things? Look, it's a leg E, probably a peak E in November if there's no new high in the 30-year T-bond interest rate monthly chart. It's a G/C in the weekly chart, and a G/C, probably a G, if this pulls back underneath 40.20 in the next, I'd say, 40.20 on a closing basis in the next couple of days, you've got your dreaded H, and that becomes a peak G. And at this particular point, I have to wait for the J to finish. I'm probably going to put in a down arrow to say at least a sell signal for now, but I don't want to get too carried away. So this is saying, what if yields really do pull back? What if crude oil trading at up 39 cents at 86.22. And I'm going to do this tonight. I'll do it. I'm not going to do it now. I'm going to show you the left side, right side price time match, how I would draw this from the peak D top over here, how it could pull back, where it could pull back, what's the timing, what would happen if it goes to 81. It's at 86 right now. And we're looking at IYT. This is a transportation index. Big move up to a leg E. This is D right here. D and E is where you become a little bit cautious to say, okay, what happens next? Are the technicals holding well enough? Can this continue? Well, so far, all the technicals are fabulous in the iShares Dow Jones Transportation Index. So I'm looking at this, and I know that some people had gone short the various indices. I looked at it and I kept looking. I said, am I wrong? I don't see anything here to say to me, let's go to the DOG, which we're out of now because we were short the Dow via the DOG since the August high. And then we just, on the way down, we took profits and we finally got stopped out. Look at this, making a lower low in leg F. The peak F in the weekly chart, 38.66 was the high. Peak E in the daily, peak F in the weekly. This is saying we're getting to the area where maybe it's going to find some support, and that'll say that the market could start to pull back again. But all I can say is I have to look at each chart separately. And this is just saying to me that with the volatility index, the VIX index, actually, I want to get rid of all this analysis right now. There's so many charts that I need to look at and see what's happening. So this is a leg E to the downside in the VIX index, trading down 262 at 23.47 underneath the up channel, mini channel that's called the inside track propellant zone. Now it could turn into a repellent zone. And I'm just saying, wait a minute, maybe on the shorter term, the Fed has done so much that it's actually working, and that could tell us a bunch of things. And now we've got this dichotomy between the SMHs, which are rallying sharply today, up 12, almost 13 points at 206.94, at the same time as there's a possibility of a chip glut. I'd spoken about that a long time ago, about 6, 7, 8 months ago. I said, what's going to happen with them building all these new fabs when they finally come? It takes ages to build them. When they finally get it, they're going to be stuck with these labs. And look at advanced micro devices, up huge today, up 11%, up 6.60 at 66.47. But look at that weekly chart. I've been contending that many of these companies have been in a recession, almost a depression, actually, over the last year. They've just seen lower lows and lower highs for months. Look at this monthly chart. So this could turn out to be what the Fed is trying to accomplish, but not really being spoken about, or at least not much. And I'm going to go through some of these things in a moment. So have I forgotten anything? I did the yields. I did the yields, but I want you to show you the other charts. Look, so you've got the reversal at a potential peak G, very close to calling it a peak G. G/C at the moment. This is the cup and ladle pattern, the cup and handle pattern that goes sharply above and makes a 1-to-1 to the upside above the left side high of 34.72. We've gone all the way to 44.83. And look at this. This is wood, the iShares Global and Timber Forestry ETF. It's telling us that in the shorter term over the last weeks, the broader geopolitical situation has the iShares Global Timber and Forestry ETF. Let me just get that back into the site here. Let me move it over right there. Doing very nicely, just over the 200-period moving average for the first time in weeks. And the Philadelphia Housing Index, look at that strong candle. So I contend that there is so much better than worse at this particular time that we've got to take it into consideration. I'll be back in a moment. Basil Chapman, Dow's up only 868. S&P's up 155. We'll be right back. Whew, what a day.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yes, so now let's do this. Let's go to some questions came in. So now let's look at this. First of all, I'm going to just do the 1-minute chart. We made that peak D. Remember, obligation in Chapman wave is to get you to at least a peak D. And we're pulling back and we're making the cup formation. Will there be a retest? And then I'll measure the vertical line right here at this peak D on the 1-minute chart. It could be anything. This is at 10:03 at 39.19.50. Does it fail right here? It's basically in a bowl formation, like a cup and more like a bowl. Slow move, trying to get back to the upside. We'll see what happens. And then I like to measure what's happening if there is a touch of that high. All right, let's get back to our story. So here we go. I was looking at, yes. So I had a question when I was doing Tommy's show a little early on about Exxon. So I've been talking about this all for about a week or so. I've been saying we're getting to the left side high. I think the whole area of the oils are starting to somewhat deteriorate. And just on a purely technical basis, and that we could be seeing some kind of a topping action. The OIH made a leg D, then a peak D about a week and a half ago, pulled back. The 9-period moving average was acting fantastically. The MACD was good. Stochastic was beautiful. On-balance volume was overbought, and it pulled back. But the price is the arbiter of the trend, and the price went to a peak E, and then a higher peak E with a doji candle. So, folks, can you believe after all this action that it tops out just at that moment that says 319.70 3 days ago? It struggles at an all-time high with this tiny little candle. It opens and closes at the same price. When it happens either at a bottom or at a particular point, look at this way, the way the candle on the 12th of October, right on the testing the 200-period moving average, turned into a reflective turnaround to the upside. Excuse me. Look at this little plus sign right there, gap up, gap down. The doji candle acts as a halfway marker. So I use only a few candles in the candlestick technique. Two of them are of my own making. One is called the Chapman Roman candle. And then there's another candle. But in the meantime, back at the ranch, the OIH went from 317 round number high back in June the 10th, the week of the June the 10th, pulls back to the 195.77 level, makes a double bottom within a point or so at 190. Oh, it's a little bit more, 198.59, but it makes a beautiful cup formation with a higher right side shoulder there, and then rallies sharply. So the cup, the dreaded H, becomes a beautiful cup formation, rallies all the way to where? To 319.70, within less than 3 points and 300 less than 1% of his previous high. So this is where you can expect some vulnerability, but it's only leg C. So there should be a pullback, and there may be a retest at some point. Look at the monthly chart. Cup formation, testing. Oh, it went to a higher high. So that becomes a leg. At this point, I got no choice but to call it a leg F in the Van Eck. There it is. Oil Services ETF. Wait a minute. CVX. CVX goes from 182.40 back in June, the week of the 10th of June, down to the 130s, screams to the upside, makes a Chapman wave. This is the other candle that I use that is my own making. It's not the candle itself, it's the way it's used. If a candle goes to, if a price that you're following goes to a potential high or a potential low, and the candle just before or the candle just afterwards is a plus sign, looks like a doji candle where it opens and closes at the same price, especially if there's just a fractional difference between the left side high and that high that following session. 186.38 was the high of the 7th, 186.38, and 186.25 was the next doji candle. That's your Chapman wave silent doji. And that silent doji says 186.38, I think I said. I'll just put that in. 186.38 was the high of whatever day it is. Let's just say 11, whatever it is. 3 days ago was, 3 days ago we're on the 10th, the 8th. All right. So within that context, what we're looking at is a potential double top. It's still a leg C, meaning you should pull back and then go to a higher high. But in the short term, we've got the potential here for the whole oil sector. Now, I don't want to just jump out of turn. I wonder what Schlumberger is doing. Schlumberger, let's put it over here. SLB. Oh, that's way higher. This is, Schlumberger is a fantastic company. A, B, C went to a D with a silent doji high. I'm watching this closely, but I'm just thinking that there's a chance now that the whole oil sector doesn't have to. I wouldn't short it, but there could be a pullback here, and that's going to alleviate some of. I'm only saying this because if it works, it alleviates some sector. I shouldn't put CSX because that's a rail. It doesn't have anything to do. No, well, it does, but not really directly with oil. But in the meantime, NFS. I haven't looked at this for ages. NFS Norfolk Southern, except I've got the wrong symbol. But I'm looking at this. Let's look at the SLX. This is the steel sector. Acting okay, up $1.31 at 56.31. So that's what I was saying before. How selective this whole thing is. That within the context of sector, for instance, ASA is a stock that I always follow in the gold sector. ASA, gold and precious metals. Just use it kind of as a kind of a single. I'm originally from South Africa, so it's just something that I do. And this was lagging. Even yesterday, look at that horrible down move from the 1340s down to 1280. And now look at this big move up. So even within the gold sector, even within the silver sector, look at this SLV, there's selectivity. So this is an E, this is in a leg F to the upside with a little doji candle. So I'm just saying to you, selectivity in this particular phase is absolutely imperative. You don't have to be so afraid of the market. If you find what you like, just put in a stop, buy it, put in a stop, a reasonable stop, and then let it do what it's going to do. And look at this. iShares Silver Trust, beautiful move to the upside. But what if you had PAAS, which usually is a great silver stock, Pan American Silver? It ain't doing that well. CDE is one that we did have at some point. Look at this. It's down 34 cents today, 363. So, and this is core mining. So be selective. And that's the reason why I've said to subscribers, we're kind of focusing quite a bit on the sector ETF rather than make ourselves vulnerable to a particular stock within that sector. But if I find stocks, like for instance, we had a single-digit stock that we bought yesterday, which has done exactly what I wanted today, and at the same time, we have the 3 times long Dow, the UDOW. And we've had it for quite some time, a 33% gain so far today. Up until today in the that. So you just got to be very selective. And then I was talking about the IAI, which is the IAI broker, and I missed this up on the IAI is trading at, this is the iShares broker dealer ETF, trading off the high of the day, which was 100.11, trading at 99. We actually are long from 45s from a couple of years ago. We didn't get back in. I was talking, didn't do it. And now it is up almost 10% from where we wanted to get it. You got to be selective. I'll be back in a moment. Dow's up 787.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so what I like to do is to measure vertically what's happening on the left side when you get these potential double tops. Well, on the 1 minute chart, look what happened at 10:03. 10:03 this morning, Eastern Time at 39.1950. And look what happened at that peak C1, C2, double top just below. Well, the technicals were failing. And finally, the green turned to pink and you turn down. But it's attempting to find some support here. So all I say is you go from one step to the other. The weekly chart, this is a 1 minute chart, the 2 minute chart you can see right here, made that alternate count G/C. Here the technicals were way weaker, but actually the price so far is holding quite well. So this is what you need to do. You need to go time frame to time frame and just do your technical analysis. So here we are. I had a couple of stocks mentioned in the den that were gold and silver stocks. Yeah, but look at this. This is one that we did not get. I usually grab this when I'm looking at gold stocks. I even spoke about it the other day to subscribers. When we're going for gold and gold is acting well, I got Nova Gold Resources. I like to get a very low priced one as well. If we can get the core, that's one, the leader of the sector, that's great. But sometimes on a percentage basis, you can get a fabulous percentage gain by going for a much lower price. In this case, it is a much lower price. It's a very low price. It was in the fours. It hit 420s. Back around the 5th or 6th of November. Here it is at 549. What a nice game, 30-something% gain. What we are looking at is it's trying to go for the $5.55 200-period exponential moving average. Right at this particular point, it is very close and says it should try to touch that 555. But look how the weekly, this is a nice leg. See it in a cup formation in the weekly chart. And look at the monthly chart. Horrible chart. But this is the strongest leg we've had in a monthly chart in a long time. So the month has still got a long way to go. We're not even halfway into the month. So I'm just saying that you have to be very specific. And I think that's the key to surviving this particular phase. Don't get so carried away. You think, oh my, if you read the newspapers, I mean, you could jump out the window. Don't do that. Just step back and say, hey, I put it a stop. Whether it was if everything was going up and I bought something, I would still put in a stop. Everything is going down and I wasn't shorting, I was buying something, I'd make that stop a little tighter, because if it works in these conditions, that's fantastic. Okay? All right, enough with that. Now let's run the stocks. Apple. Big move up today. And it is trading at 142.83, up almost $8. Now, the whole problem with Apple, and of course, you've got that whole thing with the chip sector. It should be a benefit to Apple if the chip sector, but maybe they've locked in prices, they've done other things. But whatever it is, the Apple chart in the monthly says, hey, nothing really to worry about here. 182 back in January. The most recent low was that 134 level. And now it's made a double bottom at that 134. 134.75 was the low back on that was October the 13th. And then it goes all the way to the 150s. It pulls back from the 200 period moving average in the Eiffel Tower, straight up, straight down move. And look what happens. It tested 134.38. It makes a lower low. And even yesterday went to 134.59. So it's a 3-time touch of the 134s. In a sense, that becomes a magnet. If it's twice, it's one thing. 3 times is, oh, yeah. It's a little bit more important than it was before. And it says that's going to be key support to hold if there's another pullback in Apple. The further it gets away from it, the greater the chances are that that's become a propellant zone. So anytime it gets into the 130s, it should hold and then try to power higher. If it stalls from here and comes back under 140 in the next 2 days, that's not so great. So this is not bad for Apple, but I think it's a huge digestive phase. It got repelled. Here's the weekly chart, the middle one. There we go. It got repelled. Chapman wave inside track, repellent zone, woof, comes back down. Now it's made this little mini double bottom, but the technicals in the weekly chart are still not great. So I think that Apple can continue consolidating a little while longer. And that goes really for the tech sector. Let me look at something we had once upon a time. Don't have it anymore. We took huge profits in it. This is Agilent Technologies, scientific solutions for labs and businesses. So this is the kind of thing I like to look at. We don't have it. I haven't got back in. But it is starting to show that it is resilient because it's constantly making higher lows and higher highs. And that just says, as long as it's doing that, it is in a sector, scientific solutions, labs, and businesses, it's in a sector that has some accommodation as to being able to mitigate the negativity of higher prices all around. They can add. They have a little bit of a flexibility to be able to add a little bit more to their product line. UNG, yes, UNG, we'll look at it right now. That's the natural gas sector. So this is a nice balance. Finally, it's at 1977, up 61 cents. We tried to get it the other day. It was in leg C. We waited for that big pullback, and we got in. It didn't work out at all. It got repelled from the 200-period moving average, which is really nuts because this is the winter season. This is usually when natural gas historically has a really nice move. It usually starts kind of in September-ish. And here we are, November. So, yes, I don't think it's ready for the big move just yet. That was much too deep a pullback. But it's going to be, because it has to do with other conditions like weather, supply, demand, all sorts of things, I'm just going to have to wait. But I do believe it is in play for the next couple of weeks. But where you get in with the least risk, I don't know if today's the day. To tell you the truth, this is one that it should be working. The fact that it isn't working means that it's in a very volatile phase right at this moment. I don't know what the reasons is for the volatility, but it didn't do what it was supposed to do. It should have held, and then it had to push into the 2380, 2420 area by now, and here it is going into lower lows at 18, and now it's trying to rally. So I'm not the one right now because we were hurt a little bit. We always have very tightish stops, but I can't do that. So IONQ, Ionic, generate, optimize, execute quantum circuits. So this is one, I always find these stocks that I'm looking at and I do the analysis and I have not a clue. Well, I mean, I can read, but I don't really have a clue as to what they do. So this fits in that category. The bunch in this particular category is having a nice session today. All I can say, purely on a technical basis, it looks to me like it's in a trading range. It's trading at 538, up 77 cents, huge 17% move today. But all I can say is it's probably stuck between 583 and I'd even say 455, just for the moment. I don't see anything just yet. It's stuck in a range. Yeah, thank you. It's got all that information. formerly DMY Technology Group, Inc., Illinois, is a quantum computing company. The company is engaged in quantum computing, develops general purpose quantum computing, all that quantum. All I can say. Hey, what's the song? Quantum. Anyway, I'll be back in a moment. Dow's up 892.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So just as we're about to wrap up, let me do a couple of things here. Yes, this 1 minute chart with some of the Chapman Wave techniques that we've got. Here's your left side, right side price time match. It says by 11 o'clock, there should be a test of the left side high of 39.19.50. We'll see if that happens. Okay, just don't have to get too carried away. There's some going into this 11 o'clock time frame is really important. So let's just now what we've done is we've had two phases of the first part of the day done. Now we've got that whole lunchtime thing going on. So if by 1:30 the Dow, which is up 890 points right now, is able to hold above 650, that's just going to force and not pull back much sharper than that. That's just going to force some new buyers, and some will not necessarily be forced because they're looking for an entry point. And yes, they don't want to pay up like this, but they're saying, wait a minute, what if the market doesn't pull back? So think of this as three major sections. We've done the first part. It's in two parts itself. Second part is this whole 2 hours going up, and I'd even say going into the 1:30, 2 o'clock time frame. If after that the market is holding really well, it's probably going to force the market to hold gains, very good gains, all the way into the close. If there is a sudden, and we've seen this so often lately, if there is a sudden pullback, the Dow is up 871. I'm using the Dow because it's for me one of the lead voices. If all of a sudden you're looking at it, and it's only up 390 points by 2:20 or 3 o'clock when Tom O'Brien comes on with his show, I'd say, you know what? Yep, it's going to take that kind of pullback says, ooh, it's going to take a little while to get back to these levels. So it's a very important session for me. It has finally, the Dow's gone above that inside track resistance zone. Check out my opening call, my daily newsletter. As I say, we do have one stock that we just bought yesterday, a very low price stock in the 7th. Days young, but so far it's up 18%. I mean, this kind of whippiness is crazy. Have a wonderful rest of the day. Stay tuned. Great program. Steve Rhodes comes up. Don't miss that. I'll be back tomorrow.